Hey everyone, this is Dan with Theta Trend. Today is Monday, February 29th, 2016. Happy leap year. We had a little bit of a pullback in the market today on a day that started out pretty green, and that's a little bit of reason for concern. The Russell ended the day here at about 1033.89, down about 0.32%. But we had the market up quite a bit higher earlier today. It's a little bit difficult to see. Maybe I'll just zoom in here a little bit. We're on the daily time frame, and we're taking a look at the Russell 2000. And you can see here on the daily candles, we had a push right up into that 50-day simple moving average that is declining, and from there the market turned around and it pulled back into this area of consolidation. That 1035 bound is kind of the upper side of this box that we've been watching, and the lower side of it is down here around 985. And the market basically tried to get up and outside of that box today, and it didn't quite make it, so it turned around and it headed back down. While the market was up here on the highs, I went ahead and adjusted the position by adding a couple more butterflies to it. So we have a 4 butterfly position right now, 2 butterflies centered at 1000 and 2 at 1020. And we'll take a look at that in just a minute, but that's what these blue lines represent. So this was the previous position, that was the upper expiration break even, and then after making the adjustment today, and the upper expiration break even is now somewhere up around 1047-ish, something like that. And so push up into the 1050 area is going to be the next signal that it might be time to adjust on the upside if we do get there. And it is certainly possible that we'll get there. On the downside, the expiration break even moved up from about 960 to 972 or so. I think 972 is pretty accurate. So if we get a move lower, what we'll probably start doing is peeling off these upper butterflies as the market continues down. But we don't know what it's going to do. We're not going to predict it. We're just going to react as it takes place. So I've gone ahead and dropped down here now to the 65-minute time frame. And the 65-minute time frame, every day we have 6 candles, so that brings us back to 1, 2, 3, 4, 5, 6. So these are the candles from today, from where I am right here to where the day ended. So you can see that the market did push up higher earlier in the day, and from that level it found some sellers. And basically, when the market gave up the high of the day from Friday, we'll look at the futures as well. When they gave up the high of the day Friday, they really pushed it lower into the close today, and we came back down inside of this 1035 level that we've been keeping an eye on. At the same time, we really don't have a broken market here on the shorter term time frames, but this is a little bit ominous, and that has more to do with just the size of the move that we've made recently than anything else. We still have a rising 5-day simple moving average. We have a rising 10-day simple moving average. We really haven't violated any really big levels on the 65-minute time frame. It does look like we're sitting right around this 1033 level, getting ready to break that, which was support on Friday. So that's something to be aware of and be a little bit concerned about. But tomorrow, if we're going to see continuation of this uptrend, what we would probably need to see hold in the market is something down here around 1025, and this was the prior high. The green oval here is where the April CIB started, just for frame of reference. Violating this level down here around 1025, maybe we come back down somewhere into the neighborhood of 1020-ish to 1017. I think if the market breaks down below this 1017 level, it's going to be down below the 5-day and the 10-day simple moving average, and at that point it might be able to come back up and find some resistance at those and potentially head lower. So if we see the market getting trapped down here in this kind of in the 10 teens, I guess we'd call it, if the Russell gets down there, then there's some reason for concern that maybe we're going to see some continuation on the downside. For the time being, though, we could still see a little bit of chop, and we are still exhibiting more or less a pattern of higher highs and higher lows. There's a little bit of a potential violation here, but there hasn't been any really significant level breached or anything. Certainly coming down here to the 1,995 level and violating this would be reason for concern that we were going to come down to the 980s and even lower to retest the lows. But for the time being, we're still sort of up here on the higher end of this consolidation, and it's also certainly possible that the market just pulls back into this 1035 to 985 range and chops around a little bit. There's nothing to say that that can't happen, or even that it chops around and pushes a little bit higher and then pulls back. So to immediately be jumping on here and saying, oh, the market's going down is not wise, but it's just to recognize kind of the patterns that are playing out. And with a rising 5-day simple moving average, generally the trend's going to be slightly more bullish. But we do see some reasons here for concern at the end of the day, so we're just going to keep that in mind going forward. If we go ahead and let's go ahead and hop over to TF. And so TF is the Russell 2000 index futures, and I sort of like to watch this intraday. So this dotted blue line is actually 2 lines. There's a dotted blue line and a dotted purple line there. And so we have the 1-day and the week-to-date volume-weighted average price. Since today's Monday, it's the same line. But we can see here earlier in the day that the market was finding some support around the volume weighted average price on the day. It pushed up here, 1040.50, this black line right here. This was the high of the day as of Friday. So the market pushed up and through that, and basically what happened here in the afternoon is that as the market kind of broke back down through that level, it broke pretty hard. And it fell all the way through the volume weighted average price on the day, traded back up, it found some resistance, and it sold off again. So there was what seems to be a fairly clear shift in sentiment here, at least on an intraday basis. And certainly what happens tomorrow is going to matter. If we can get the market back up and above this, then there's a case that maybe we're going to continue higher. If the market continues to find resistance around the volume weighted average price on the week, then we're going to have to evaluate it and see where it might pull back to. Coming down here to this 1018 level, which is similar to about that 1020-ish level in the RUT index, that corresponds with the volume weighted average price from last week. So it's possible that the market might find some support in there as well. Certainly we don't know where it's going to go, but it's just something to be aware of. And I think for the time being, a little bit of caution is probably warranted, at least on the upside. So what we did today is I went ahead and added a couple of butterflies here at 1020, and they're 50-point wide flies. So we have the 970, 1020, 1070 butterfly, and then I also picked up two of these April 105 IWM calls, so you can see those there. I'm going to go ahead and uncheck that and have those unchecked. And so we come down here and we can see kind of the position, so we have the two butterflies there, two at 1000, two at 1020. And so the position as it sits as the end of the day today, we closed here at 1033.90. The delta on the trade's negative 1231. The gamma's negative 15. The theta's about $26 a day, 25.91. Vega's negative 79.92. And it looks like we've swung back to an open profit on this trade of about $24 or so with the pullback. When we add these upper butterflies, the position becomes a little bit shorter delta. So we added those, and then the market pulled back. And it wasn't really even a huge swing. I think it was up in the neighborhood of 1037, 1038 when I added those. Actually, maybe it was a little bit higher than that. It may have been in the low 1040s. I'll update it on the spreadsheet tonight. But from there, we had the pullback, and that certainly helped the trade as well. On the downside here, we have quite a ways to run before we have any sort of issue. If we trade down with this strike here, probably down into the neighborhood of 990, 985, maybe even 980-ish. At this point, it's going to make sense to start considering taking off the 1020 butterfly and just running with the 1000. And if we do that, we're going to be locking in a gain on that upper butterfly. So that's good. But if we continue higher here, you can see that kind of as we get up into that 1050 area, that's going to be the next point at which maybe it makes sense to adjust the position. The price slices are set the same as they were last week, so we have a 1.2% move higher. The market at 1033, that would be like the market opening at 1046. So if we saw the market open up there 1.2% higher in the morning, we'd be looking at an open loss of about negative 140. And if the market was to gap lower here to about 1,000 or so, we'd be looking at an open profit on the position of about 278. So another thing to keep in mind is that this is essentially a 2 CIB position this month as opposed to the 1 butterfly position the month before, last month in March. So if you wanted to think about this in terms of what it would be for 1 RUT butterfly and 1 RUT call, or IWM call rather, you would essentially divide these Greeks by 2. So you'd be at negative 6 for the delta, gamma negative 0.07, theta about $12, $13. Vega would be negative 40-ish, and the open profit would be about $12. So if you were trading just 1 butterfly instead of the 2. But that's all I have for today. If you have any questions, feel free to shoot me an email, info@thetatrend.com. And thanks for watching.